Great week in the markets and even greater week in our account. And let's take a look and see what happened over the last week when the market was going straight up for the whole week. And we are up, as you can see here. Let me just turn on the little yellow thing around here. We are up 775 and the market is up 5.83. This is coming after being mostly down, flat to down for a couple of months here. And as you can see here, we are the blue line here. We're pretty much back to all-time highs, and the market is catching up, but we are firmly ahead. Our projected yearly return is back on track. Now, could this just be a bear market rally? Of course, that nobody knows. Monday market could turn and go back down, but do we really care? No. If the market goes back down, our net leak will go down slightly, and we will have opportunity to continue putting on new trades. If it goes up, well, we still have some positive delta in the account, and we'll hopefully be able to close some of the trades that are currently open. As you can see here, over the 5 days, we caught up with all the losses from the last couple of weeks. So that's on that. We don't know what's going to be on Monday. Could go either way, but we don't really care. So let's take a look at the trades, because we were able to close a couple of trades last week, namely these three here on the 2nd and then on the 3rd, which was yesterday. So 3 trades closed. As you can see here, I'm looking at capture rate on naked puts only. So it was 80, 85, and 83%. We are looking for 80% or better. And this is the capture rate, premium capture after paying for PDSs and fees and whatnot. And then this is the percentage of the time that we stayed in the trade based off of the original DTE. So around 80% of the original DTE we spent in the trade. Also last week, we put on a new negative delta trade. This is something that's replacing my put debit spreads that I was doing before. We were able to close a couple of those put debit spreads for a little bit of profit over the last couple of weeks. There's still one that's probably going to expire worthless. But this is a new trade that it's replacing those. And this one is different in a way that it's financed by the additional naked put, and it's basically 2-to-1 strategy, 2-to-1. So 2 put debit spreads financed by one further out of the money naked put, and that one starts off with a slight positive delta and also a little bit of credit collected. So if the market continues to go up, we just it's going to expire worthless, and we just keep a little bit of premium. But this the main goal here is not the premium collected. The main goal is to have some negative delta trades if the market starts going back down. Okay, so let's take a look at the account and see where we're at. We have a bunch of, I think 16, actually, let me just check that. We have 15 more one-to-one trades that are still open. And depending on what market does on Monday, we may or may not be able to close some of them. Like, for example, let's see, this one is at 68%, 72, 79. This one is very close. So just unless it's something happens on Monday, even if just the market stays flat, just the theta decay should bring us up there. But we'll see. These are put debit spreads that are attached to the naked puts in a newer expiration. And here we have 73%, 72%, 48. So it looks like we are going to be putting on some new trades next week. So let's see here, 45, 49, 51, 67, 68. So pretty much all the trades are getting closer to the profit target. And this was to be expected. If the market went up, we were loaded with positive delta. So even though it's very nice to see 7% up, 7.75% up for in a week, that's not really pure profit per se. It's kind of regaining what we lost over the last few weeks. So you have to keep that in mind. We are pretty delta positive. So the markets going up will affect us quickly, but so will the markets going down in a negative way. This is one of the reasons I'm adding these trades, the negative delta trades in between, to kind of soften that volatility of the account and to be able to get a little bit more premium, or not premium, but a little more profits on some grind down markets. Of course, this means I'm adding additional risk to the downside, and we have to be careful about that as well, because you always have to pay somehow for you have to pay either in paying the cost, the premium, or taking on additional risk. So I chosen additional risk, which means we'll, all else being equal, we'll have to cut down slightly on the number of open trades, the income trades, the 1-to-1s and such, in order to accommodate the additional naked puts to finance these put debit spreads. But there is a balance, and there's going to be a small portion of the account, and we'll see how it performs. And we'll consider as well some other trades, maybe some ratios like 3-4 or 3-3-1 and things like that. There are different things we can do, but that's what it is for now. Looking forward to the next week, and until then, have a fantastic weekend. I'll see you soon. Thanks.